Welcome to The Explainer. Today, we are going to tackle one of the most frustrating parts of trading, hands down, finding that perfect entry point. We're going to break down how to read the market's story so you can start trading with way more confidence and, you guessed it, precision.
So let me ask you something. Have you ever placed a trade, felt totally sure about it, only to watch the market immediately, and I mean immediately, turn around and smash your stop loss? Yeah, if that sounds familiar, the answer isn't some new magic indicator. It's about really understanding the market's underlying structure. It's a super common trap, but today we're laying out a clear plan to help you sidestep it for good. So, in this explainer, we're going to think of it like a funnel. We'll start with the big picture forces that move price, then we'll decode the language of trends, and finally, we're going to narrow it all the way down to the exact signals that help you pinpoint your entry with a whole lot more confidence.
Okay, let's start at the very top of our funnel. At its heart, every single price movement you see on a chart is just a battle between buyers and sellers. And we see these battlegrounds as what we call supply and demand zones, or as you probably know them, resistance and support. Think of support as a price floor. As the price drops down to this level, more and more buyers start thinking, hey, that's a bargain, and they jump in. At the same time, sellers start losing their nerve. This big surge in buying interest is exactly what can stop a downtrend dead in its tracks. And on the flip side, of course, you've got resistance. This is like a price ceiling. As the price climbs higher, sellers start taking their profits off the table, and new buyers get a little hesitant. This wall of selling pressure, that's what can bring an uptrend to a grinding halt. Now, it is so crucial to remember this. These levels are not just random lines. They represent the collective psychology of thousands upon thousands of traders. You're literally seeing the echoes of fear, greed, and regret from everybody else playing the game. It's pure human emotion, right there on your chart. Okay, so now let's see how these support and resistance zones actually build the foundation for our next big topic, market structure. This is where we learn to read the story the chart is trying to tell us, instead of just getting whipsawed by all the noise. When you strip it all away, the market can only really do three things. It can trend up, creating that classic series of higher highs and higher lows. It can trend down, making lower highs and lower lows, or it can just chop around sideways when buyers and sellers are kind of at a standoff. Just recognizing which phase you're in is step one to getting some real clarity. But here's a super common trap. Market structure can look totally different depending on what time frame you're looking at, right? The solution is to just simplify. Pick one higher time frame, say the 1-hour chart, to define the overall trend. That becomes your North Star. It helps you ignore all that confusing, misleading noise on the shorter time frames. All right, so we've got our main trend identified, but how do we know if that trend still has legs or if it's about to run out of gas? Well, that is where two key concepts, our critical turning points, come into play. Okay, check this out. On the left, you've got a break of structure, or boss. Just think of this as the market shouting, yes, the current trend is still going strong. It's breaking those old highs in an uptrend or old lows in a downtrend. But on the right, we have a change of character, or a CHOCH. Now, this is your first major warning sign that the trend might be ending. It's when the price fails to make a new high and instead breaks a recent low, signaling that control might be shifting from buyers to sellers, or vice versa. Let's look at a bearish break of structure right here in action. See how the price closes decisively below that previous swing low? That right there, that's our confirmation. It's telling us that the sellers are still in charge and this downtrend probably has more room to run. So here it is, the crucial point. For any structural break, I don't care if it's a boss or a CHOCH, to be valid, you have to see the body of the candle close past the level. A wick just poking through, that's not enough. That can easily be a trap. A body close, now that shows true commitment from the market. Okay, now for the fun part. We can finally put all these pieces together. Now that we understand trends and we have the signals for continuation and reversal, we can build a clear, repeatable process for finding a really high probability entry. This three-step process is really what separates methodical trading from just guessing. First, you start high. Use your main time frame to figure out the overall trend. Second, you wait. You have to be patient and watch for that change of character that hints at a reversal. And finally, you zoom in. You drop down to a lower time frame to pinpoint your entry, and that is what lets you get a much, much better risk-to-reward ratio.
So why does all this matter so much? Well, as this quote says, precision is everything. A slightly better entry can totally transform your risk to reward. It means you can use a tighter stop loss and have a much bigger potential profit. That's the math that underpins long-term successful trading.
You know, following this kind of structural framework is about way more than just a new technique. It really represents a fundamental shift in your mindset, from thinking like a retail trader to reading the footprints of what we often call smart money.
And the results of this whole approach? You stop chasing lagging indicators. Instead, you actually start anticipating moves because you understand the market's real logic. You start to see where the big institutions are likely to step in and where they need to push the price to find liquidity. Ultimately, it all comes down to this one question. By focusing on market structure, from the big picture of supply and demand all the way down to those specific signals like a boss or a chotch, you can finally begin to read the narrative the chart is telling you. And that clarity, that's what gives you the confidence to find and, more importantly, to trust those precise entry points.